There is no alternative. That was the claim today from the Chancellor, saying the government gave complete backing to the Bank of England in its bid to bring down inflation by raising interest rates. Jeremy Hunt was speaking after new figures showed the economy is growing, but that's before we've seen the full impact of the recent rate rises. Well, our economics reporter, Neil MacDonald, is with me. So let's start with the economic figures, and at least GDP is growing just.
Yes, and of course, a few months ago, a lot of people were expecting that we'd be in the middle of a two-year recession right now. So that hasn't happened. However, the economy is performing much weaker than it did before the pandemic, much weaker than it did before the financial crash back in 2007. So today we learned that in April, the economy expanded by 0.2%. But of course, in March, the economy shrank by 0.3%. So it's like one step forward, but only after one step back. If you take a slightly broader view, over the latest 3 months, the economy 0.1% larger growth, yeah, but the bare minimum.
So what's the Chancellor saying?
Well, Jeremy Hunt welcomed these figures, and it's fair to say that we are doing better right now than the Eurozone, which has just fallen into a sort of shallow recession. But the Chancellor is adamant that if we want more growth, we've got to do something about this stubbornly high inflation. And today he gave his complete backing to the Bank of England's policy at the moment of raising interest rates to try and bring inflation down.
In the end, there is no alternative to bringing down inflation if we want to see consumers spending, if we want to see businesses investing, if we want to see long-term growth and prosperity. And that's why we will be unstinting in our support for the Bank of England as they go about their job to bring down inflation.
There is no alternative, Mrs. Thatcher's famous phrase. If there is no alternative, then this could mean supporting a lot more increases in interest rates. So the Bank of England, of course, has already raised interest rates all the way up to 4.5% over the last 18 months. Today, financial markets think that could carry on going all the way up to perhaps 5.75% by the end of this year. We haven't seen interest rates at that level since 2007.
Which in turn is not great for the economy.
No, this is going to come as a big shock to a lot of people out there, especially anyone who took out a mortgage, fixed a mortgage a couple of years ago when interest rates were much lower. The Resolution Foundation reckons there are 1.6 million households out there in that position this year. They're facing an average increase in their mortgage payments of £2,300. Put it all together, that's a hit of £12 billion to consumers. Now, they did those calculations 2 weeks ago. They're already planning to revise them upwards as increases in interest rates expectations grow. With the economy doing so poorly, of course, it wouldn't take much to push us into recession.